this morning, it's all about taxes with Dr. Fred Mugambi, who's the head of Kenya School of Revenue Administration, that is KRA, and also Margaret Masaku, Chief Manager at the Policy and Tax Advisory in Domestic Taxes Department. Dr. Mugambi, what do you have to say about that? The story that just went on air, tapping more taxes using technology.
Thank you very much. It is true what Professor Bitange Domo is saying, that there is need for tax administrations to leverage on emerging technologies to be able to expand the tax base. And at the Kenya Revenue Authority, we are doing exactly that. And I would say that one of the things that we are doing is integrating our systems with IFMIS, which is a government system, so that then we are able to identify, who has received what tender, so that we are able to tax that. And in the summit that is happening in Nairobi this week, starting yesterday, those are some of the things that we are looking at, the new technologies that are emerging, papers, researches that have been done, and how we can actually bring in some of this to support our job. Okay.
Margaret?
Yes, one of our key strategy in expanding the tax base is actually use of external as well as the internal data that is within KRA, so that we get those who are not in the tax base within the tax base. As we all know, when a burden is shared, it's lighter. Therefore, our aim is to get all people who are not paying taxes in the tax base, so that it's spread out and the tax burden becomes easier. Therefore, we are using a lot of technology, like the systems we have, to use internal data to bring those people who are in business and they are not registered as taxpayers to be in the tax register, so that they chip in from the businesses they are operating. Yes.
When you talk about increasing the tax bracket, are you also, and when in terms of technology, are you also targeting the informal sector, such like the Jua Kali sector? Because there's been a lot of concern that this sector doesn't pay tax.
True, because transactions have several parties involved. And currently, if our systems are able to pick those who transacted, the seller and the buyer, and our systems are able to give us reports on who bought, what did they buy, who did they buy from. When we have all this data, we are able to see, did the seller declare the tax which is attributable to the service he provided, and the buyer, what he bought, is he in a business which ought to be taxable? If he's not in the tax net, because we have the data and the information, we register in the tax register, hence expanding our tax base.
Okay. And before we delve deeper into this interview, you talk about technology increasing the tax bracket, ensuring that people who don't pay tax are also in this tax bracket. Does it have any connection or any linkage with what Kenyans have been raising a concern after KRA announced that bank accounts should be linked with the KRA? And so Kenyans are wondering, like, what bank? I already have a bank account and already pay tax. So what are some of bank accounts that KRA is targeting?
On PIN as a requirement for, this is the personal identification number, being required for opening a bank account. This is not a new law. It has been in the first schedule of the VAT Act 2013, and also in the income tax, it was a requirement. However, it's that the implementation has taken off now, and banks, even for their regulatory requirements, they are required to make certain reports to their regulators. And PIN being one common identifier for both individual persons as well as entities, PIN becomes almost a requirement everywhere. because even in the other transactions, especially those listed under the Income Tax Act, where PIN is required, because all these transactions finally end up through the bank.
But what bank accounts is KRA actually targeting? Because assume I have 2 accounts. For example, assume I have 2 accounts. Then I'm employed, of course. The company I work for, like I work for the Standard Media Group, it pays taxes, it pays my tax. Then the other account where maybe I do small business, put money there, or someone decides to send me money, put it there, is that the account that you're targeting?
Just to set the facts correct, the requirement of a PIN by KRA, by banks, it's not wholly a requirement by KRA.
Okay.
Because banks are also regulated by other laws, which requires them to do some disclosures of the persons depositing money or transacting with them. We know there are other laws like the anti-money laundering laws. Therefore, banks also require an identifier of their banks.
Okay.
So they will require a PIN, because a PIN holds vital details of a taxpayer, whether an individual, an incorporated company, or even a partnership.
Okay, okay.
Just to add to that, I think Kenyans need to realize that tax paying is a solemn duty. And if someone does not have a problem with the tax, in other words, if someone has paid all their dues, then they have no reason to worry at all. If you look at some of the more advanced countries in the world, you'll find that public data actually converges at the Revenue Authority, purely for purposes of making sure that everybody is paying their, their due.
Okay.
And that's the only way we can make sure that, you're not funding me. And I think Kenyans need to look at what is happening around. Roads are being constructed, hospitals are being constructed. The Big Four agenda is here, and it is us as a country who are going to fund this. The cost of not paying tax is too big for us, not just now, but in future, for our children and others. I would like an environment where my daughter, attends a good school. And how will that school be built? It will be with our taxes.
Okay.
And therefore, I call upon all Kenyans, to take this as a solemn duty, just like we've seen in many other countries.
Okay, let's talk about the 4th Annual KRA Tax Summit. What is the focus of the summit?
Yes, we have, every year we have our tax summit. And basically what happens is that during the tax summit, we bring together different parties, locally and internationally, to come and have what I might call the tax discourse. And we look at various researches that have been done. We have discussions between ourselves and other revenue authorities. We have discussions between ourselves and our stakeholders. And at the end of the day, the purpose of this is to be able to come up with a body of knowledge that is going to inform our policy with regard to taxation and fiscal policy.
Okay, and when you talk about the tax summit and widening the tax gap, Margaret, what has the government put in place to ensure that the Big Four agenda becomes a reality in terms of widening the tax bracket?
The just enacted Finance Act 2018 has a very big focus on the 4 agendas which the government is concentrating on. In the area of universal health care, we realize that there is a purposeful support of those in private sector who do wish to augment what the government is doing. And therefore, in terms of tax exemptions, those people in the private sector are enabled through exemptions to invest in construction of specialized hospitals and also to equip the same so that the burden of health care, we do not have so many of our population going abroad to seek specialized treatments. Again, when they are importing the materials and equipment they require, there are exemptions on excise duty, again on railway development levy, Therefore, when those goods are coming, they'll be cheaper, and this makes it a tax incentive to those people in private investments who wants to enter that sector of supporting health. Again, we have areas where we have goods which are not really necessities or some kind of leisure. In the Finance Act, we've seen raising funds which will support art and cultural and games and social provisions for our young people, so that they are able to keep away from harmful behaviors. So we have a fund which will help in providing those social services which our people will keep off harmful consumption of harmful products.
Okay.
Yes, and they will be healthy. So that is one area we are supporting health.
Okay. And Dr. Mugambi, how does KRA leverage on its school, KSRA, where you come from, to enhance tax collection, and how is this relevant to the Big Four agenda?
Thank you. Let me start a little further. This country has a lot of things that we need to celebrate. I think this country does not even know that the Kenya School of Revenue Administration, which is KRA's training school, is one of the only 4 accredited training institutions of the World Customs Organization in East and Southern Africa. And what that means, therefore, is that we actually train for 24 countries. But of course, our primary focus is the Kenya Revenue Authority and the government of Kenya, which we serve. And so what we're doing is we are training tax experts, we are training customs experts for the Kenya Revenue Authority. We are providing capacity building for county governments in the area of public revenue collection. We are able to train, sectoral groups, banks, real estate, universities, parastatals in areas that can help them not just to comply to the tax requirements, but also areas that can help them to understand the tax law. And so basically what that means is that an industry can come together, a regulator can come to us and tell us that we are bringing together principles of all public institutions or colleges, come and train them for us on the various tax issues. Let me tell you what is happening. Some institutions have compliance problems, but the reason they have compliance problems is because their finance officers, their CFOs, misadvise the CEOs on matters tax. And so finally this tax is not paid. And so the school plays a very important role. But I would also want to say that we are offering not just short courses of the nature that I've explained, but also long-term academic programs. And so we offer, specialized certificate programs in tax and customs, diploma programs in taxes and customs, and we have a partnership with JKUAT and Moi University to offer postgraduate diplomas in tax and customs and a master's degree in tax and customs, which is possibly the only one of its kind in Africa. So basically we invite the public to actually come and do our programs at KSRA because we are there for the public.
Okay, so Margaret, how is KRA intending to work with the private sector and the Juakali sector to ensure that revenue, tax is paid, and in terms of widening the bracket?
In the just assented act, we have targeted the informal sector through the newly introduced presumptive tax. This will be for taxpayers whose turnover is not more than 5 million. And the way it is going to be implemented, it is in an easier one-off manner, where the taxpayers, when they are going for their business licenses, they will pay 15% of the cost of the business license as a one-off tax. It is simple. It doesn't require a lot of regulation. We will partner with the local authorities, the county governments, so that once they pay a one-off, or when they are getting the license, or at the point of renewal, we will have captured them at that point.
So when you capture them and they pay their taxes and you bring it into a tax bracket, is that something like an exemption for them?
It depends on the business they are in. We know if they are in some of the businesses which are going to be managed at what we are referring as SOPA, Special Operating Framework with the government. Any investor who will be under that, to support the 4 big agendas, they will enjoy exemptions. In terms of income tax, they'll have a preferential rate of their income. Again, in terms of VAT, basically all the tax laws, they are exemptions for those investors who will be under the special operating framework with the government. Yes.
And with all this introduction of new taxes, let me call them new, after the passage of the finance bill, do you see any growth in the manufacturing industry?
Oh yes, with the provisions which have been brought under the Finance Act 2018, it's very pro manufacturing, let me say so. One, we know the cost of power in the manufacturing sector is a big expense. In recognition of this, the law has allowed manufacturing sectors to recoup as a deductible expense 30% above what they've spent from their income. This will go a long way in supporting the manufacturing sector. Likewise, the manufacturing sector, we have only one source of energy currently mainly used. To support the manufacturing sector, the Act has provided for support for other alternative sources of energy. This is specifically the generation of power from wind sources and also the solar equipment which will be used to generate power from these sources will come exempted of taxes. So an alternative energy source will be an added advantage to the manufacturing sector.
And Dr. Mugambi, as we bring this conversation to an end, we were talking about technology and technology increasing collection of taxes. Yes. But even as much as we're talking of technology and in bringing in IFMIS, have you foreseen any sort of challenges, and especially you're working with different companies, manufacturing companies?
Yes, yes. Of course, there is the challenge of uptake of technologies, especially at the micro and small enterprise sector. But we are working very closely with the Ministry of ICT. Actually, in yesterday's conference, which was hosted by KRA and the Kenya School of Revenue Administration, the PS, State Department of ICT, was there. And the chair of the blockchain committee was there. And so we are working very closely with the various government agencies that have a keen interest on ICT to see how, we can leverage on the work that they are doing to be able to reach out to more people with regard to ICT.
Okay, thank you so much, Dr. Fred Mugambi, head of Kenya School of Revenue Administration, that is KRA, and also Margaret Masaku, Chief Manager, that is Policy and Tax Advisory in Domestic Taxes Department, talking to us about taxes and why we need to pay taxes